This is the MTPredictor weekly update for January 23rd. And just have a few things to show. Not a whole lot happening in the markets as far as, we haven't had any big advances or big declines. But let's start with the daily YM, the Dow future contract here. And if I put some of the analysis on here, if I just put the intermediate analysis, you see we just had this ABC pattern. We're into that minimum wave C resistance there. But the bigger pattern that we'll also see on the weekly, if I click on the major Elliott wave, shows us this 5-wave pattern up. Now we've taken out the minimum wave 5 resistance here, and here's our typical wave 5 resistance. Like we were expecting, we got as high as 11,000. Where are we here? 857 in the futures contract. We're looking for that, at least that 12,000 area. But we are, we have hit this 5-wave up. Our typical wave 5 resistance will start. It's right about the 12,100 area. If we look at the weekly, let's look at the weekly ES. I'm going to look at a minor pattern here, and you can see we've got a minor 5-wave pattern up. So really, even though if I get rid of this and we just look at the intermediate pattern, again showing this only 3 waves here. Here's our typical wave 3 resistance. But our minor pattern showing this little 5-wave pattern up off of that significant low for 2010 back in July. Not quite into the typical wave 5 resistance there. Right up here, and so it coincides with the intermediate wave 5 up in the Dow futures. And so we can see some more upside. We've come into earnings season. We expected to get that rally into earnings season. We have had some kind of buy on the rumor, sell the news. Once the earnings have come out, we've had some selling coming into the market. So we're in resistance area. So we certainly could see a correction at this point. But I still see that 12,000 out there in the Dow. And here's actually the weekly chart of the Dow itself. And if I use the advanced chart analysis, I click last on chart. Let me just actually remove that and get the intermediate 5-wave pattern there again. Here's our typical wave 5 resistance here. It's going to be right in that 11,945, just below that 12,000 area. On the weekly, this is the Dow. So the Dow mini contract and the Dow, obviously they don't trade at the exact same prices there. So just giving you a difference between the two there. So we'll see if they can get both the contract and the Dow cash can get into their respective 12,000 area resistance. As you see here was the selling last week as the earnings started to come out, and we had this kind of rally up into earnings season, and then getting some selling now. Also, let's just take a look at some of the commodities that we've been following here. And so we'll take a look at gold here. And our first trade in gold this was the daily chart, was the TS1 to the short side there. That was a nice 4-to-1 risk reward. And then we looked at the last week that we had the TS4 set up to the long side there, and that entered and then stopped out after a few days. And this is probably the first stop out on the daily gold chart that we've seen in quite a while. You see, it had a nice long here. That was a 12 to 1 risk reward. There we had the DP to the short side, which was a 2 to 1, a little better than 2 to 1 there. We had this TS4 to the long side. In gold, that was a little better than 5 to 1. So we had, last year was just a phenomenal year trading off the daily chart in gold. And we didn't see too much of what we've gotten here in gold. So this may be the fact that this one failed could be telling us something. The strong trend filter here telling us that there may be more downside ahead, and so so far we've taken out that little swing low where our TS4 was, and we'll see. We got some more support here for our decision point in gold. Probably going to be at this level just above the about 1302. So we'll see how that plays out. Oil, on the other hand, has been kind of in a little more consolidation. We had our DP short signal, and that was coupled with our Elliott wave pattern, which was 5 waves up. Not a particularly nice pattern, but potential end of trend there anyway. And if I put the analysis on that, you can see the target hasn't been hit, but it hasn't stopped out yet either, as far as the initial stop at 92.59. Now, if you did move your stop up once you hit the 100% initial risk line, we had a break-even trade and you're out. But just watching this now to see, does oil continue to sell off and kind of follow gold to the downside? It's held up a little better, but we'll see what we get. The target there around 86.11. And if they take out the DP, it'd be up at that 92.58. Would they have to take out that 92.59 area? So we'll see how those play out. All right, that's about it for this week. And for those clients, keep coming into the trading room, and we kind of dissect this market. Every day we come in, draw our lines, get our roadmap, and then look for either automatic setups, or sometimes we create our own setups with the proper risk reward and management. All right, we'll do it again next week. Have a good week, all.